The Wall Street bank Goldman Sachs has come under a firestorm of criticism lately for record profits less than a year after the government bailout. Goldman, like other banks, sold those toxic assets that in part pulled the country into recession. Some are asking just how much of Goldman's profits come on the backs of U.S. taxpayers. Goldman Sachs alumni have a tradition of public service, like former Treasury Secretaries Henry Paulson and Robert Rubin. Goldman alumni often go on to become top players in government and in the world's leading financial institutions. So when the financial industry almost collapsed 16 months ago,
we are acting with unprecedented speed, taking unprecedented measures that we never thought would be necessary.
It was a former Goldman Sachs CEO who, as Treasury Secretary, helped push through a $700 billion bank bailout known as TARP. $10 billion went to Goldman Sachs. But now that bailout money has become a thorn in Goldman's side.
Had I known it was as pregnant with this kind of potential for backlash, then of course I would really not have liked it.
The firm paid back the public's $10 billion with interest, but to some, the story doesn't end there. When the government rescued insurance giant AIG from the brink of failing last year, Goldman Sachs received a full payout of what it was owed, nearly $13 billion. Critics say Goldman and other banks should have taken a haircut.
Goldman Sachs has figured out how to take advantage of the guarantee that we have given them to internalize the profit and hold on to it.
Former New York Governor Eliot Spitzer faults Goldman Sachs and other banks for not passing along the benefits of billions in government-backed loans they received at nearly zero interest. For Goldman, it amounted to a $21 billion security blanket. Critics claim all of these taxpayer-financed programs allowed Goldman Sachs to reap bigger profits.
Those of us who save go to the bank, get 0%. The banks take that guaranteed money, invest it in Treasury bills, and make money and keep it. Now, the real problem is the banks are not lending to the businesses that could create jobs.
Tell me what you want, what you really want, justice!
After mounting public backlash, Goldman's CEO apologized and told the commission investigating the crisis,
anyone who says, I wouldn't change a thing, I think is crazy. Of course I'd go back and wish we had done whatever it took not to be in the position that we find ourselves.
CEO Lloyd Blankfein's mea culpa is not enough for Janet Tavicoli, a finance expert who wrote a book in 2003 about collateralized debt obligations, CDOs, complicated investments whose value fell with the housing market.
Goldman was creating securities along with a lot of other people on Wall Street. These were value-destroying securitizations spewing out of their financial meth labs. And today, they're trying to pretend that they weren't responsible for massive systemic risk.
Goldman now says its compensation pool for 2009 will be $16.2 billion, 20% less than its record in 2007, in a nod to its critics who say Goldman would never have made that money without the U.S. government's actions after the crisis. Now, Goldman says every bank in the country benefited from the government's action and that they're grateful to the government and to taxpayers for the role they played in stabilizing the financial system. Gratitude might not be enough for President Obama. He and former Fed Chief Paul Volcker are pushing tough new rules to limit the trading risk and complexity of the financial whizzes like Goldman Sachs. For CNNMoney.com, I'm Christine Romans.